Yeah, life is sweet when the sun out, like the trees in the summer. When the seas are troubled, and then we all need someone. My life, no be smart in, we all strive, to live life in our comfort. So forgive me if I fumble, cause I'm only human. Somebody move that I don't know. Hit them with a 7 box combo. Always looking out my window, paranoid and confused. I'm not sure anymore. Who is knocking at my door? And so as the day comes, as I go on, protect me, Lord. I cannot trust my neighbors. Be my savior when that day comes. Defend me from my enemies and my neighbor. You can bank on it. You can put 100 grand on it. Anything I said, I stand on it. In a private lane, I land on it. Hollywood and they call me Bankole. Cause I walk around with a bank on me. Show them Gangnam style, put the gang on them. Kiss my fingers up and bang on them. Lily woo. Different type of evil available. And any one of them can kill you. At any time, anything can happen. No. Any one of us could have been pop smoke. We must go when the most I colors. So I'm paranoid, borderline bipolar. Wear my vest and clean my corner. I ain't going out, brother. You can bank on it. You can put 100 grand on it. Anything I said, I stand on it. In a private lane, I land on it. Hollywood and they call me Bankole. Cause I walk around with a bank on me. Show them Gangnam style, put the gang on them. Kiss my fingers up and bang on them. Oh yeah. Do I know what come I do? Do I know what come I do? Nobody know tomorrow. Choro kajuru. And if a boy feel macho, make him lick red like a tomato. If him not dead, then him comatose. Oh, go from as the day comes, as I.
Hello, and welcome to our first ever Career Readiness Conversations with Old Mutual group. And my name is Karen Muyengo. I'll just introduce myself before I introduce the speakers. Just want to thank you, everyone who's managed to join. We will record the session and make it available later on, but I'll just explain a little bit about what this program is and what we're trying to achieve. So my name is Karen Muyengo. I'm a qualified non-life insurance actuary, and I'm working in the Old Mutual Insure company as a senior manager in the actuarial control function team, which essentially focuses on reviewing the work that other actuarial teams do. And today, I mean, as Old Mutual, we've really the actuarial teams have really tried to introspect to understand how can we as the actuarial team better service sort of our university students, how can we give back, what are the gaps that our university students are seeing, and how can we come on board to give back and to bridge that gap between university learnings and what we do at work. And hence this series called Career Readiness Conversations, we will focus on both technical and softer skills sort of talks. And one of the first ones we're going to do today is life in the day of an actuary, life in the day of a life actuary, just to understand more what life insurance actuaries really actually do at work. There will be more conversations around other actuaries. So for example, general insurance actuaries, investments actuaries, or even more interesting, perhaps, robotics actuary. So look out for that. We'll send out invites whether on LinkedIn or through the universities as we did. But if you do want to just make sure that you don't miss out on these, please do make sure that you register, and I'll put again the link in the chat. And yeah, just make sure that we've got your email address and we've got your details, and we'll be in touch for future conversations so that you don't miss out on anything. Cool. And today we will have a panel discussion with some of our really amazing colleagues and staff within the group with many years of experience. And I'll just introduce them a little bit, but they will introduce themselves with more detail in their journeys and what they've gone through. For our host today, it's actually Kiara Bilwe Ndlozi, who's currently working in the group actuarial products team in the life insurance space as an intermediate actuarial specialist. She started working in 2020, graduated in 2019 at the University of Cape Town, and on our panelists, we have our very own Prabhashini Modli, who is the Managing Director of Old Mutual Corporate. She's an experienced financial services executive and qualified actuary. She has over 20 years of experience across Old Mutual Limited, spanning various markets and functions, and she'll tell you a lot more about that. In addition, we have Morongwa Sitole, who's our Chief Financial Officer of Old Mutual Corporate. She's a fellow of the Actuarial Society of South Africa, so she's a qualified actuary and has broad experience, having worked also again in various actuarial functions across the financial services industry. And she specifically also has a chartered enterprise risk certification, and she can speak more to that as well a little bit later. And then last but not least, we have Reginald Kanga, who's a product expert in the development and management team. He's a qualified actuary as well and graduated from Cape Town and Stellenbosch, and has been working at Old Mutual since 2015. So without further ado, I'm going to hand over now to Kia, who's going to host our panel discussion with our amazing panelists. Feel free, guys, to put questions in the Q&A chat and enjoy the session. If you've got any questions at all, I'll also put another email in the chat that you can email us as Old Mutual, but this really is a session to just bridge the gap between what you're studying at work and what our work is for life insurance actuaries. And like I said, there will be more sessions in the future around this. But yeah, do enjoy. And over to you, Kia.
Thank you very much, Karen. Welcome to everyone once again. I think let's get started with what I think is an actuarial science icebreaker. So to all of the panelists, could you please tell us a little more about yourself? What has your actuarial journey been like? Where did you study? And most importantly, how long did it take you to qualify? And also, what roles have you been in since you started working? Maybe we'll start with Prabhashini. Thank you.
Thanks very much, Kia, and thanks, Karen, and hello to everyone who's joined us. I really hope that you find the session insightful and useful on your journey through actuarial science. So Karen's mentioned I studied in Cape Town. I'm originally from Durban. I currently live in Johannesburg with my sister and my cat. And I have been at Old Mutual since graduation or just before. So my journey with actuarial science started in high school and just investigating, what potential career options are out there. And it was before the days of so much of online information, and there was an actual physical book that was called the Mathematical Digest that used to have lots of puzzles and problems, and on the back cover they'd always talk about this career called actuarial science, and if you enjoy problem solving, if you enjoy mathematics, maybe this is for you. And I remember writing a letter to the Actuarial Society to get more information about it. So that's where my journey started. I applied for a few bursaries, and then I relocated from KZN to Cape Town, where I studied, and I worked a bit in Cape Town. And I've been in Johannesburg for about 15 years. how long did it take to qualify? I really tried to leave university with the maximum number of exemptions I could get. So I think if you're still at varsity, you know, your full-time job is to study. So try to get as many of those exemptions as you can. It makes a difference. And when I started university, it was still at UCT. There was a postgraduate diploma in actuarial science. And I attended those lectures, which was very helpful with the postgraduate subjects. And I took just under 3 years to finish the remaining subjects. I just wanted to get them out of the way, like, you know, which was great. And then I've had the benefit of working, even though I'm a life insurance actuary and I did my specialist exam in life insurance, I have worked as a finance actuary in the life space, also in investments. I've worked in our channel economics, which is supporting our distribution channels space. I've worked in a bit of business development. So I've done a lot of non-actuarial roles where I applied my learning and actuarial stuff. So I'll leave it there, Kia.
Thank you very much. Reg, or Reginald, sorry.
You call me Reg, it's fine, Kia. And yeah, good afternoon to everybody. And thank you so much for joining us today. As Prabhashini was talking through her journey, I felt I could relate so much to it, a lot, because I also grew up in a very small town in the Free State. I lived there for most of my life until about matric, where my maths teacher was like, okay, you know, you need to think about what's next for you at university. You're very strong in maths, you enjoy languages. Let's find you a good career that you can potentially pursue. So she actually printed out a Old Mutual bursary form for me to apply and write down everything and then submitting the application. And fortunately, I was able to secure the bursary and got the opportunity to go and study at UCT from about 2011 to about 2014. So all expenses paid by Old Mutual, and they offered us a lot of support there while we were there. We had tutors who were supporting us, and even some of the HC, or the human capital specialists, used to come and visit us on campus just to find out how are things progressing along. So it was quite a good experience as well. And then, yeah, as soon as I got done with the undergrad degree, also went straight into my first role in Old Mutual, which was in the evaluation space. So I was looking after a New World Savings, which is a savings product that sits in personal finance. And I did that role for about 2 years. So that was very technical, running models, working with data, manipulating data, writing valuation reports, even presenting the valuation reports as well. So it was a very, what I would consider quite a technical actuarial role. And then from that, I moved into another area within Old Mutual called OMART, which is Old Mutual Alternative Risk Transfer. So that was sort of a game changer to me, because it's OMART by structure as a company that basically assists other corporates in starting up their own insurance businesses. So I got to learn a lot about how to run an insurance business at a much more smaller scale. And again, there I did some technical work. I'd say 50% of the work was quite technical, and then the rest of it was very much client facing and client managing. And for me, I always considered myself to be sort of, the introverted actuary, but I was pushed to work with external clients and different stakeholders, and I found that I really enjoyed it. And from that role, I moved on to customer solutions, which is sort of one of the big areas in Old Mutual, which is very much focused on product development. And I was the executive associate to the director of that space, Ray Brelevitz. And I was in that role for about 2 years. And that was in the height of when COVID started. That's where I was in that role. So it's very interesting to navigate that kind of environment in a working from home context and in a COVID context as well. And then after that role, I moved into the current role that I'm in now, which is in product development, which is right now focused on the development of a new home loans product, which I'm quite excited about because we launched it on Monday to our Old Mutual staff members, and we'll be launching to customers very soon. So yeah, that's my career journey so far, and yeah, qualified and completed my exams in 2019. Yeah.
Thank you. And last but not least, Moronga.
Thanks, Kia, and good afternoon, everyone. Really happy to be part of this session this afternoon. So I'm Moronga, and I'm from Polokwane. And similar to Prabhashini and Reggie, I studied at the University of Cape Town from 2004 to 2007. I What led me to the actuarial career was also a physical career book that we had in my school, in my guidance class. And Actuary was actually one of the first careers that appeared, as it was alphabetic. And it really fascinated me. And the more I found out and researched and spoke to people, luckily, that I knew who were studying it, the more I became interested. So I graduated in 2008. I had 6 exemptions, and it took me 2 years to pass fellowship. Oh, 3 years, sorry, but another 2 years to then complete one subject, which I wrote 6 times. So I remember that subject very well. I actually mark it this day, today. So yeah, quite a long journey. But yeah, in terms of my work experience, I've worked in the life industry across a few companies, and I've worked in life valuations primarily, but also in capital and balance sheet management, and in enterprise risk management at Old Mutual. And recently, from March, I am the CFO in corporate, so still relatively new. Around 2017, I did my CIRA. So I had an itch to start studying again and, do something technical. And yeah, I was lucky enough to also pass that and really enjoyed it, and got to apply it in my previous role in risk management and also in my current role in finance. Yeah, thanks, Kia.
No, thank you to everyone. I think it definitely is nice seeing hearing the different perspectives. And I'm also from UCT, also an Old Mutual graduate. So, and I think to kick us off, Morongwa, what is life insurance, and how does this differ from like other products like medical and short-term insurance?
Thanks, Kia. So the technical definition is of a life insurance product is essentially that a client enters into a contract with an insurance company, and the client pays either an upfront single premium to the company or a series of recurring premiums, frequently, most commonly monthly. And in turn, the insurance company is obligated to provide a benefit, and the benefit is contingent on a human life event occurring, and it's usually either death or life, death or survival. Now, life is not black and white. You get variations, and there's a lot of hybrid arrangements out there, but primarily all the complex risk and savings long-term products that meet that definition would be on a life license.
No, thank you. I agree. Yeah, I remember in my 3rd year, the word contingencies, that course was a lot. So it definitely taught me about that. And Prabashni, in just your understanding, could you please list what other types of roles do life actuaries work in?
So typically you get the title a life actuary if you've chosen that specialist subject and you've specialized in life. There is also a next level of where, from a continuous professional development and getting an accreditation, to sign off on certain regulatory requirements and other requirements, you can be a certified, have a certified life actuary accreditation. But, with this, you can work anywhere in a life insurance company. So there's the very traditional areas, which would be things like developing the products, pricing the products, then in the finance space, which is about valuing the products, analyzing the experience. You could even do, and I thought this was such a strange thing when I came across it, you could be a marketing actuary, which is basically someone who is a technical support to, client-facing, whether it's financial advisors or to certain clients themselves, to be able to explain, technical features and help sell and communicate properly so people make the right choices. Morongwa mentioned she worked in an area called balance sheet management, so capital and balance sheet management. There's the investment side. So there's a number, and those are the more traditional, and then there's the non-traditional that Karen mentioned, robotics, and data analytics is also becoming quite a bigger field. Yeah.
No, I definitely agree. And still, Prabhashini, you did mention that you worked in the valuation space. So could you please just explain to us, what does a valuation actually do on a day-to-day basis? And what skills do they apply?
So, Morongwa mentioned the contract, right? And life insurance is this contract between the customer and the company. And effectively, as a life insurance company, you're selling a promise. It's not like, when someone walks into a grocery store or a clothing store and you buy something off the shelf. Our product is this contract, which effectively captures the promise that if happens or that happens, in exchange for your premiums, this is what we will pay out. So in the valuation space, and life products, their name kind of hints at it, tend to be very long term. So some of them are for the whole of life. Someone could buy a product at 35 or at 45, and it could last until their death, until their retirement, so the pricing you've got to monitor. Then you've got a bunch of products, you've got a bunch of policies of these commitments. How much money should we hold? How much should we reserve to honor the commitments? How do we expect the experience to play out? So in statistics and things, people on the land may have heard about, learned about the law of large numbers and different statistical distributions. So how do you model that to understand from a financial perspective, how are these groups of policies going to behave over time?
That makes sense. I would just like to remind everyone online, please do send through your questions and I will be able to answer them. So Reg, you mentioned that, not you mentioned, but you are a product expert. Could you please tell us what is the role of a life actuary in risk management?
Yes, so the role of a life actuary in risk management, I think it's a very critical one in the sense that in our training as actuaries, we do a subject called Actuarial Risk Management. And as Moronga also mentioned as well, there's a subject which you can do, which is called Enterprise Risk Management. And in those two subjects, you learn a lot about the risks that a financial institution like Old Mutual faces, and even non-financial institutions face a whole variety of risks. And we're really trained in how do you identify those risks as and when they arise? And when they arise, what do we do about them? How do we measure them? How do we mitigate or protect ourselves from those future kind of risks occurring again? So I think actuaries have a lot of skills because of their training as well, where they can give a lot of input into risk management processes and even risk management strategy that a company would particularly set up. And another thing to mention as well about risk management is that I feel there are stakeholders that are directly involved within it. So a CRO, for example, who's a chief risk officer, it'll be their responsibility, for example, to oversee risk management for an institution. And then in some cases, I feel, for example, with product actuaries that would come in a more indirect format. So they could design, for example, an insurance product in such a certain way that it also minimizes how much insurance risk a company takes on when it sells life insurance policies to customers. So for example, we might limit on a life insurance policy like funeral, we might limit how much the cover amount is so that we don't take on too much risk as an institution. And I guess the third point that I wanted to mention as well is that I think risk management as well is a cultural thing. It's not necessarily just the responsibility of a CRO or of the board of directors or senior management to practice and to be involved in risk management. It's actually up to all employees, every single stakeholder, to be an active risk manager in their own right. So knowing, if a risk arises, knowing who do I talk to? when a risk event occurs, and how do we manage a risk as a business. So it's very much a cultural thing as well, where everyone is involved, not necessarily just senior stakeholders.
I definitely agree. And then still with you, Reg, what does a product development life actually do on a daily basis? And then how does this differ from a pricing life actually?
So yeah, I like to think of the work that a product actuary does. There's multiple things that are going on. So their actuaries will be very much involved in designing a new proposition that's going to market. Like I've given an example of us developing a new home loans proposition. So that's something that we're building from scratch. We speaking to various stakeholders to get an understanding of, is there a need for a home loans product, or is there a need for a funeral product in the market? And we get to the conclusion that yes, there is a need. So now we'll start designing the product and thinking about what kind of benefits do we want to provide to customers to meet certain specific needs. So in a funeral benefit, I keep coming back to funeral, you could construct, just sort of a plain funeral policy where it pays on death, but then there's other additional stuff that you can add that are value adding, like an airtime benefit or a grocery benefit to assist customers in their time of need. So a product actuary will be very much involved in designing those sort of benefits, where pricing actuary would come in. So there will typically be a very technical person who has a good understanding of the product itself, the benefits and how they work, but they need to put a price on how much do we need to charge or need to charge our customers to basically transfer their risk over to us as an insurance company in exchange for that specific premium. So they'll run all sorts of models and make all sorts of assumptions using data, analytics, all sorts of various things to try and calculate a price. And at the end of the day, that price or that premium should be such that it covers, underlying costs associated with running that specific product or the specific business. It should also cover expected claims that we think will emerge from that specific product, but it also needs to leave some extent of a profit margin, because at the end of the day, shareholders are also looking to get some sort of return from the money and the capital that they've invested into an insurance business. So the pricing actuary will be very involved in trying to get a balance of those different variables. And then you also, as Prabhashini also mentioned as well at the start of the conversation, you get marketing actuaries. I feel like I've been a marketing actuary over the last 2 weeks or 2 months or so, because we've been very much involved in putting together materials that we're going to be showing our customers and staff members in particular in terms of, okay, we launched a new home loans product. This is what it looks like. This is how it works. You have to think about, when someone reads a product brochure, will they understand from the get-go what they're getting themselves into? Will they need to ask more questions? Are we empowering customers as well to make the correct financial decisions? So there's a lot of that comes into play. And a key one as well is, how do we communicate something in a very basic, client-friendly language? Because I think living in South Africa as well, there's disparate levels of financial education and financial and understanding of financial products. So we should, in theory, be able to describe our products in such a basic way that you can explain it to your mom, to your grandmother, to whoever the case might be, and that they really understand what's going on when they're taking on an insurance policy or home loan product or whatever the case might be. So there's very much that element of marketing actuaries. And then to close it off, you also get the actuaries who actually look after product once it's been developed. So they'll make sure or try to investigate, has the product performed versus what we expected? Is it selling well? Is it still meeting regulatory requirements? So there are those kind of actuaries as well who are more interested in the day-to-day management and making sure that the product works as it's intended to be. So at a high level, those are sort of the 4 main categories that I visualize when I think about product development and pricing.
No, I certainly agree. And I think taking one thing to take out is, guys, communications exam is very important. Because at the end of the day, if people don't understand what it is that we're selling, they won't buy it. And there was a question here that says, how do you go about pricing life insurance products? So Reg, you did touch on that in your answer. I don't know, before I move on to Morongo, if you'd like to add anything more specific to the pricing process.
Yeah, I think I touched on it on a high level, and I think I'll leave it at that. It's very much around using or getting an understanding of the cash flows that you are thinking are going to emerge from a specific kind of product. So what do we think expenses are going to look like over time? What do we think claims are going to look like over time? And making sure that your premium can actually cover those expenses and cover those expected claims as and when they emerge. And then again, the notion of leaving a little bit of a profit margin that meets the business's requirements as well as shareholder requirements as well. So that's at a very high level, but I'm happy to tackle it in more detail, maybe offline.
Thank you very much. And then Morongwa, to your side, given your experience and with the balance sheet side, can you please share a bit more information on the capital management space and the type of work that Life Actuaries do there?
So Reggie mentioned the risk management system in a company that protects the company, and capital is a very important financial risk management tool. A capital management actuary is accountable for assessing the potential losses the company could be exposed to. And it's particularly low probability but high impact risks, both economic and non-economic or demographic, that could result in a loss, a significant loss in the company. And then the capital management actuary needs to ensure that then sufficient capital is held by the company. So as I said, that's really focusing on risks in the tail of the distribution. In fact, risks in the tails of multivariate distributions, because you're looking at multiple risks at the same time, and there's correlations, multiple risks could occur at the same time, like a mortality, pandemic, and an economic stress event. So it's important that the risks are measured individually, but also combined. Now, the amount of capital that a company holds has an impact on the stakeholders. So it has an impact on the policyholders, and it has an impact on the shareholders of a company. If too little capital is held, then there's an increased risk of the company becoming insolvent and not being able to honor the commitments to the clients in the event of an extreme and unexpected event. Again, though, on the other hand, if a company holds too much capital, then it constrains the level of dividend payment. It constrains the level at which the company can reinvest in itself and grow, which then benefits, again, primarily shareholders, but policyholders as well. So it's really a fine balancing act that the capital management actually needs to maintain and make sure that various interests of different stakeholders are managed. And there's a lot of actuarial judgment in terms of the distributions that are used, data is not always available, correlation matrices and so forth. But yeah, it's really to ensure that the company is financially sound. Thanks, Pierre.
Thank you, Morongwa. I think you're throwing around nice stats terms, that I think a lot of people can at least feel like you can apply it. But still sticking on or staying with you in terms of those tail events, or events that are unplanned, and making sure that the company has the capital to withstand that. I'd like to go back to, or just ask, how did the COVID-19 pandemic, affect life insurance space, given that it was an event, that one was unexpected? Let me put it like that.
It was very unexpected. So yeah, I've actually seen the best description of COVID-19 impact on companies is that it was an earnings crisis, but not a capital crisis. So essentially, companies really experienced significant losses due to the unusually high number of mortality claims over the period. But they had sufficient capital to act as shock absorbers. So not a lot of companies, became insolvent over the period. Again, that's also quite a nice example in terms of not just one risk materialized, being the pandemic, but there was also the economic shock as well. So it was two major, two different risks which emerged at the same time, which then life insurance companies had to manage. And I think during the pandemic, it increased the frequency of exposure monitoring that had to be carried out, because no one could really estimate or see how the trajectory of the pandemic would be, particularly before vaccinations, were rolled out. So there was quite a lot of focus on monitoring exposures, trying to model various scenarios in terms of impacts on the insurance companies, and there was a lot of reporting internally and externally. And I think it really provided the industry with a real life calibration of a pandemic loss. So again, in capital management, you try and estimate what the loss could be under a pandemic. So this provided a calibration point for the industry and tested operational resilience. Thanks.
No, thank you so much. And Pravashni, I'm also interested to hear your comment on how did the COVID-19 pandemic affect the life insurance space?
I think, it affected all people, and it affected, with so many, especially during the hard lockdown, so many people couldn't work. They couldn't, their livelihoods were impacted. So people's ability to afford taking out new life insurance cover and then also affording to continue with their premiums was impacted. So we did actually engage and provide some premium relief mechanisms. And then on the claim side, tragically in South Africa, we did have a high mortality rate from COVID, especially in waves. I think it was waves 2 and 3. So there was a lot of us seeing, the other side of those claims. So it was an exceptionally tough period. But I think there were also other industries who had it even harder than us, like travel, tourism, and so on. Yeah.
Thank you very much. And then I think in terms still more technical, Pravashni, another important skill is the ability to do an analysis of surplus. And what does this entail exactly?
So maybe to start off with, the surplus is a little bit like your profit or your loss. So the surplus can be a deficit. It can be negative. You would like, because if you are in a commercially run, in insurance for business, as opposed to a non-profit. Well, even in a non-profit, you would maybe want it to be 0 or close to 0, but not wildly negative. So a surplus, a positive is preferred for sustainability. But and there was a question as well earlier, and Reggie talked about pricing an insurance product, and we have to make lots of assumptions. You've got to make assumptions about how many people are likely to take out this type of insurance. In each given year, how many claims might there be? What will it cost us to run this? And that all goes into the pricing. And then you also make assumptions to hold capital, because you've covered capital as well to back us from a risk management perspective. And then the analysis of surplus says, if you have a surplus, which let's assume we do, where did it come from? Is it because you sold more business than you planned, that you had more policies? Is it because there were fewer deaths? Is it because your expenses were higher or lower than you expected? And why it's important is because then you use that information to run the business, because if what comes through is actually you priced to be able to spend or afford this level of expenses to service these clients, but it turns out actually you're spending more, then you've got to take action, and you've got to use that information then to drive the action. And also putting that information, if you see some of this is maybe will drive an investigation, because if you see the claims actually was very different to what you assumed. So maybe you want to go and do an investigation to see, should you change your pricing assumption? Because what you assumed initially is different actually into what you can achieve in reality. So the analysis of surplus is really, it's getting to the reasons and then using those reasons to run the business and make decisions. Yeah.
I totally agree. And I think
that was my first job. It was fun.
yes, that's good. And I think taking away from just the technical discussion and how Pravashni's question came about, or her answer, it shows that everything is truly linked. That actuarial control cycle, everything feeds into each other, which is also important. I think I'm just going to take the questions which we've been receiving now. The first one is, when did you guys reach a point whereby you felt comfortable in your roles as actuaries? Personally, a fear of mine is that I may not know, do, or be confident in my work as once I step into the office space. I always think to myself, what if I make some enormous catastrophic mistake? I don't know who would like to take that one.
I think I can offer to take a stab at that question. It's safe to say that everybody goes through imposter syndrome. I certainly go through it even now in my current job, where I only really joined the team about 6 months ago into a completely new environment, which is very different from life insurance principles and everything that I've been trained on. So there's very much that element of thinking that, my goodness, I'm in the space, I have no idea what I'm doing. Am I going to be making mistakes? Am I going to look like a fool? There's a lot of that element of imposter syndrome, and I think almost everyone, it's a universal experience. I don't think I've ever met someone who can say that, I was just waltzed into an environment and I sort of figured my way through it. I think it's a shared human experience. And especially if you are a university student, who I think if you're moving into your first role, a good manager will make sure that you understand that, or will make sure that, they'll empower you to remember that you are new, you don't necessarily have experience, and the whole point of you joining your first role is to learn, is to gain that experience over time. It's to make mistakes and to learn from those mistakes over time. So I think it's to keep that at the back of your mind as well as that, especially in your first year of work. Because for me, I generally had to feel things out, figure things out, make mistakes along the way, ask a lot of questions as well, and navigate that kind of environment. I think that's my response, Gail.
I think if I'll build a little bit, Reggie, is actually everyone makes mistakes. Absolutely everyone. And I think it's then how do you recover and what do you do if there is a mistake? Because, there's so many things that are unknown. There could be lots of reasons, why a mistake happened. And I think always learning from it and then having a few strategies for how will you recover from a mistake. And your confidence, like Reggie says, grows the more you do it. Because if you people attracted to actuarial science tend to be highly analytical, tend to be perfectionists. So you can immobilize yourself and you can almost stunt your own professional and career development if you're always worried about the mistake. So maybe also find a few, if you don't have a manager who is that kind of manager, because some of us are fortunate, and I think I was extremely fortunate in my career to have lots of very supportive managers. Maybe try to find another mentor in the business, someone you can go to and sort of just test things. And I think that can help. I took a long time. I thought of it as finding my voice at work. It took me at least 5 years. I remember being in some meetings early on and you hide there behind other people. And then the first time someone asked me a question directly, I was just like, you're actually asking me, and I was like, no, I don't have anything to say. No, because you get so stressed. So it does happen to a lot of people, but you gotta push through.
I remember when I started. I know I'm not a panelist, but I just remember when I started, the advice that I got was, within the first year, ask all the questions. Like, ask even what is this? Even though you studied it and it was familiar, but just ask. And then another question is, hi, what is the fellowship which most actuaries at Old Mutual achieve or see as most valuable?
I think I can go for this again. So I think by fellowship, you probably mean one of the exams. So the fellowship exams. I think for most actuaries or life actuaries, I probably would have done the F102 exam, which is the life insurance principles, and the corresponding F202 exam, which is the life insurance applications exam. But I mean, I've heard of other actuaries who've done completely different things and have managed to find themselves in a life insurance company like Old Mutual. I mean, I used to have a colleague who did the ERM exam, which is the enterprise risk management exam, and then they did banking as a fellowship level exam. And completely different route, but then they found themselves in Old Mutual and still being able to add value because of the skills that they would have learned as an actuary.
Okay, and then Morongwa, another question is, from your just experience, what softwares do life actuaries use often?
Thanks, Kim. So a life actuary, as Reggie and Prabhashni mentioned, the contracts that you're looking at are long-term. So the cash flows that need to be projected are of a long-term nature. So a life actuary typically projects cash flows, over the lifetime of the policies, and it's all cash flows in and cash flows out. So basic models can be built in Excel. But of course, the scale of the calculations that a life company or even just a segment in the company needs to carry out with multiple lives assured, and the multiple data fields that are required and the complexity of the calculations mean that the Excel the calculations can become too intense for Excel, and Excel can bomb out. So there are commercial software that can be purchased by a company, or some companies even just develop their own proprietary software in-house. I must say I use the calculator a lot in my current role to sense check things, so I think that qualifies as software as well. Thanks, Gia.
Thank you, Morongwa. And then I think a question to all of the panelists is, what does your current role entail? Yeah, like just in a bit more detail. And what does your everyday look like? I think like you hear MD, CFO, like what is that? I think maybe Reg could go first.
Okay, cool. I can go first. So I think for the last 2 months, it's been a lot of project management and a lot of trying to get the product ready for launch. So we've been involved with a lot of different stakeholders, particularly legal, compliance, just being involved with them and helping them, supporting us in trying to get some of our marketing material signed off. To make sure that it reads in a customer-friendly way, that the material is compliant to relevant regulations and legislation in the country as well. So there's that element as well. And because the area that I'm in is very much a new product within Old Mutual, it's felt a lot like I'm working for a startup company in a way. Every day is a new thing. So one day you think, okay, today I'm going to be focusing on, creating a product brochure. And when you think about it, I'm an actuary in training who did statistical models and all sorts of things in university. And now many years later, I find myself being the person writing up a product brochure or writing up an educational guide. And then tomorrow there'll be another problem to solve where, we find out that a specific model isn't working, and now we have to put our hands in and try to get involved. So it's been a very dynamic environment. As I said, very startup-like in fashion, where each and every single day sort of presents a new problem. But in short, I would say over the last month or so, I've been very much focused on marketing and collateral. So AKA a marketing actuary, but not really.
Thank you, Reg. Prabhashni.
So yeah, so I think Karen gave it away at the start. This is my 21st year at work, and my role is more of a generalist role. So I don't have to be, one doesn't have to be an actuary to have my role, but it does help because we're in the business of life insurance. I have a lot of meetings. I had to make peace with the fact that my work happens through having effective meetings and how do I allocate time in my day. Some of my meetings every day are just catching up with my team who help and support and have accountability for various pieces, and especially now with hybrid work. So post the pandemic, we sort of come into the office 2, maybe 3 days a week, but we're not all here at the same time. So being deliberate about connecting with the team is important. And then sitting in sessions, whether it's at the moment as an industry, we're facing a very large change in reporting regulation. It's called IFRS 17. It's a big change. The implications are big. So there might be some sessions and updates from the team. What is emerging? There might be obstacles. There might be some client issues. So it's a varied day. It tends to be from 8 to 5, back to back with meetings. So I do tend to have to do my reading and prep for the next day or couple days out in the evenings. So it does end up being a long day. I try to take a little break in between from logging off to, doing my reading and stuff for the next day. Yeah.
Thank you, Prabashini. Morongwa.
Thanks, Gia. So yeah, I've been in my current role for 6 months, so still new. But as CFO, I'm really accountable for firstly leading the finance function within our business. As Prabashini mentioned, it's really delivering through the team. So that's quite a big aspect. And we carry out valuations, as we've discussed in the session, financial reporting on multiple bases that we need to report on, and also financial projections, so budgeting. We also do things like experience investigations, which is the process we follow in terms of reviewing our assumptions that we're using in our valuation models, checking if they're still appropriate and whether we need to change them or not to align them with experience that's emerging. We do bonus declarations on with profit and smooth bonus books. And yeah, also have quite a few meetings myself during the day. But yeah, I think a typical day is also really spent understanding, what's happening in the external environment, the external developments, which could impact the financial outcomes of the business, the exchange rate, inflation, pandemics. And then also, I spend quite a lot of time also, engaging stakeholders, collaborating with other functions in the business, and really discussing approaches to solving issues that we face, or approaches to new things, aligning with different stakeholders. So yeah, and definitely I'm spending a lot of time on IFRS 17. Now that it's about to be effective Jan 2023. So that definitely occupies a big part of my day currently. Thanks.
Thank you, Morongwa. And Reg, what can a student do now in order to prepare themselves to be a life actuary? What skills would you say they need to get?
I think the work that a student can put in today to become a life actuary, in the sense that you want to get to your qualification and finish your exams, is to really put in a lot of work and to try and get your exemptions. Like, I can't mince my words when it comes to that. I think the more exemptions that you can get outside of varsity, the better, because as you progress in your career, you'll find that you'll get more responsibilities, and then having to juggle studies and your work at the same time is probably one of the most challenging things that I have personally experienced, and I'm sure all the other all my other panelists and colleagues as well have experienced the same thing as well. So the more exemptions you can get, which means you can knock those out of the way so that you have less exams to worry about, the better. So that's more from a technical perspective. And then on the other side as well is that I would strongly encourage just finding ways to improve the more softer side of things. So the more softer skills like being able to communicate. As Gia also mentioned as well, I think it's one of the most critical skills of being able to communicate something to someone else in a simple way that makes sense. And the fact that even in a working environment, actuaries don't necessarily work in a vacuum. You almost always have stakeholders around you. My manager is my stakeholder. The person who I manage is also a stakeholder. Doesn't necessarily have to be someone completely external. So there's a strong need for you to be able to have interpersonal skills. So being really good at communicating things to all of your various stakeholders as well, and even being good at positioning your messaging and what you want to say to different stakeholders as well. Because what you want to say to a customer won't necessarily be how you communicate information to a CFO or a head of actuarial function. You have to position the way you convey facts and convey information to different stakeholders. So I think it's very important to have the softer communicative skills as well. I think it's important as well to try to get some exposure to the workforce as well. So try and be involved in VAC work if it's possible. I know Asaba does a lot of work from a VAC work perspective, trying to get students to be involved in getting VAC work opportunities with the various insurers. So I would highly, highly suggest to get those kind of opportunities so that you can actually get exposure to the kind of work that actuaries would do in a very relaxed, I would say, environment where there really isn't a pressure of you getting anything wrong. You're there to job shadow, you're there to learn, you're there to ask questions, and to be surrounded by the professionals and the profession that you're also looking to pursue as well. So yeah, I think it's important to have the balance of the technical stuff, which you will get via your exams. You'll get the analytical thinking, you'll get the critical thinking, the strategic thinking from your exams, but it's very important as well to have the softer side to be a more balanced professional.
Thank you very much for that, Reg. And I think before we start giving advice, let me take you guys back. How was that transition from university in your first role? I think Morongo can go first.
Thanks, yeah. So it was very daunting. I had to firstly understand, get used to the working life. You know, when you're a full-time student, I didn't do any work when I was studying. So just getting used to the workday, meetings, company jargon, trying to understand what the output is and how it links to the overall company outcomes was quite a big transition. And then juggling studies as well was quite something that I needed to really adjust and make sure that there's sufficient time, because you do get busy at work. You're trying to learn, you're trying to advance, at work, and also trying to pass exams. So yeah, that's really what I remember from my transition.
Thank you, Pravashni.
Yeah, you're taking me back. I actually think the toughest thing was handling such a long day. So it was the days where you have physically had to be in the office the whole day. Because in my final year at university, we didn't have lectures, back the whole day. We had long periods of like a couple of hours in between, so you could just go relax. You could do some of your, whatever. You could do your personal you could do. So the hardest thing for me was this day. And I remember I had a few of my friends from varsity, and like around 3 o'clock, we would just be, and I think I ate so many bawans in that year, like every day at 3 o'clock, like I cannot make it through this day. The part that was very helpful is I did do vacation work, And my first job, I was very lucky, I think, was in the same team where I did the vacation work. So I knew the people, and that was very, very helpful. I knew the people, I had a little bit of an idea of what the kind of work was. So I think, yeah, that was great. But those were the tough things, and getting used to this, yeah, relentless pace.
I can definitely relate to that. My thing was not being able to nap at at 12. And I was used to go and get a hot chocolate at 3 o'clock. So yeah. And Reginald, what was your experience?
Yeah, I could definitely echo Muroma and Prabhashini's experiences as well. I felt like I was just in a constant state of confusion in the first month of my job, because you get in there and people are using jargon and words that you've never heard of before in your life. You hear APE and VNB and PVNBP and all of these complicated terms. And I'm sitting there like, what is this even English? What what are people even saying? So yeah, it is quite daunting coming into the workplace for the first time and having to be in a professional environment amongst very, experienced, intelligent individuals as well. So that can feel daunting. I certainly felt the same. But I think, having that opportunity to do VAC work, much like Prabhashini, sort of softened the impact a little bit. I did VAC work in the team that I eventually joined. So yeah, I knew all of the stakeholders. So I didn't have to navigate now having to join a new team, having to figure out the culture of the team and the dynamics of the team. So I had less work to do there. So the work was very much trying to get on board with what are we doing on a day-to-day basis? Am I understanding what's being expected of me on a day-to-day basis? So that was quite a thing for me. But the other thing I enjoyed as well is that I came into my first year with a lot of graduates who were more or less at the same level as me. So it was quite nice to have that sense of community amongst people in the same floor as me, and even people in other departments as well, where we could share our experiences and say, hey, my boss said this today, or I need to submit something tomorrow and I don't know what I'm doing. It's great to have that sense of community where, we support each other. So that was quite fantastic. I really quite enjoyed that as part of my experience.
Thank you so much. And I think to the audience, please feel free to share in the chat, what are your main concerns or worries about entering the profession, so that we can also get the panelists to answer that. And then I think one question as well is that doesn't introducing a premium relief increase the risk the company takes, considering the increased mortality during COVID? So I do know Prabhashini answered it, but I thought for people who didn't see the question, it would be helpful as well.
Yeah, maybe I'll paraphrase a little bit there. It's if you look at it from a very short-term perspective, yes, it's increasing the risk, because you're saying to people, don't, depending what you decided. So it was limited. It was maybe for 6 months or for certain groups of policyholders. And you could say, but those policyholders could still claim, and you're saying don't pay the premium. So yes, if you take that short-term view, it's increasing risk. But if you take a longer term view and you say, but if I help these people through these 6 months, maybe most of them, when hard lockdown ends, they'll start working again. So I have a chance of keeping these clients for the longer term, and I don't have to go out and get new clients to build my book of policies again. So it was more taking the longer term, and also it's a tough time, and showing some bit of solidarity with the customers who've supported business. Yeah.
Reg or Moronga would like to add?
Yeah, I can completely echo that as well, is that as Old Mutual, we like saying that, we are there for our customers in their time of need. And COVID was very much the epitome of time in need. And I feel that as Old Mutual, as a company, we really showed up with the premium relief initiatives. I remember there was also an initiative where the medical professionals were in the front lines at the start of COVID, were afforded, I think, free cover of about 10,000 or something to that effect. So even that small little display of we're here to support you as our customers, and we're here to support your family members who are on the front lines, I think was game changing. So yeah.
I definitely agree with that. And also given that our products are so long term, and also like, so getting people to remember us while they're still paying the premiums and before they see the benefit, definitely does help. And I think last thoughts, I think to everyone is just, what are any last thoughts that you could give, advice, that you can share to people on how to succeed in this career, in terms of what would you tell your younger self? Yeah, I think maybe Moronwa could go first.
Yeah, thanks, Gia. Yeah, I think for me, what would I tell my younger self is to just be resilient, and to, just work hard. And I'm referring to exams, which, that path is not always linear, and it takes varying amounts of time to actually get through the exams. So I think during the moments where I felt not confident and dismayed, I would definitely tell myself to remain resilient, that it's all worth it in the end. And I think just generally, as you enter your first job, it's important to also just take an interest in the company and understand what the company strategy is, and not just focus on the work that you're doing, but understand how it fits into the broader scope of the company, and really understand what drives the company. Go through the financial reports, and other reports that go out to market, and really just get that broader context in terms of the overall objectives that are being driven. And then definitely network. You learn so much from various individuals in the actuarial community, in the company and outside the company, but also from other professionals that one tends to work with. So that's quite an important skill that I think is very meaningful. Thanks, Gia.
Thank you. Reg?
Yeah, I think I'm probably reiterating this point again, but exemptions. If one thing that you want to take away from my advice today is, please put in the work, get the exemptions. That's number one. Number two, very much echo what Moronwa said about the power of connections, especially in the actuarial community where it's so small. It's so valuable to be able to make the effort to know who's out there, what jobs and what things are people busy, or what are they busy doing, or what are they up to in their day-to-day jobs. You'll find that people are busy with very interesting things that might interest you as well. So I think it's quite useful to have connections all across the board, even if it's in the actual job family or even outside of, because each person has, an experience and a story to share that you could definitely learn from. And I think the third thing that I would definitely tell my younger self is own pace, own race. I tell that to my friends who are also studying exams, that your career journey and your exam journey as well is at your pace, your own race, and focus on what you are given. Yes, you can get inspiration from other people as well, but work in your own path, because it's designed for you, it's curated for you, and you've already sort of won in your own race. You lose when you pursue other people's races, if that makes sense. So that's what I would definitely tell myself, my younger version. Thanks, Gil.
Thank you so much for that. And Pravashni?
Yeah, very similar to Morongo. I also had lots of stressful times of not knowing, would I make it? And first year of varsity sort of okay, and then the stats just gets harder and harder and harder. You're like, am I gonna make it? So also would love to go back and tell the hard work will pay off. You will make it. But as tough as it is, and you will only make it if you put in the work, is I wish I would have balanced a little bit more. I could have, towards the later years, my student years, I did get very intense into studying. I could have balanced it a little bit more overall in other interests in my life, and also at work. You know, those first few years was just race through these exams. I didn't have to race. It was wonderful to finish them all, but I could have been a bit gentler with myself, I think. Yeah.
No, thank you so much. And I think I like the positivity of, be gentle to yourself, own pace, own race, because we definitely forget that when you're in the thick of it. And I think a last question from me personally is, knowing what you know now, would you still choose to be alive, actually? I don't know, yeah, Pravashni maybe?
There are days, it depends where your journey, and to Reggie's thing, I look at my peers, half of them are accountants, one is an engineer, one is a lawyer, because actuarial science is not easy. It's not easy, but I think it's the way you approach problems, the way you solve problems is different. So I do sometimes think, I just become an accountant, but and maybe I could have ended up in the same job I'm in today, because there are other people who got you with that route. But it's opened a lot of doors, a lot of opportunities, and it's talked to my problem solving and want to. So yeah. And then inside, would I have chosen a different route for specialization versus life insurance? I don't think it matters too much, because I got to work in investments, some of these more applied things. So maybe if you want to get to the point to being the statutory actuary, or someone signing off on the regulatory, doing evaluation for a pension fund, you've got to go down a specific route. But I'm pretty happy with the route I took and where it's brought me. Hasn't always been easy, but it has a lot of opportunity and satisfaction. Yeah.
That's great to hear. I'm happy for you. And Reg?
Yeah, I think I have the same sentiments as Prabhashni, is that, studying the actuarial path gives you a lot of skills that are highly transferable, I think. And I firmly believe, even in the role that I'm in now, where I'm in, home loans is just so far removed from life insurance. I can say I definitely benefited from the skills, the analytical skills, the strategic thinking, the critical thinking that I gained from studying the life insurance subjects, so that I can position myself to be able to operate in different contexts. So that's what I think I value a lot about being a life actuary. But also, just a reminder as well, is that the title of a life actuary, don't necessarily use it to sort of box yourself. There's a lot more that you can do outside of, the traditional life actuary. You can be in a life actuary who's doing marketing or robotics, as Karen had said at the beginning. So I think the foundation is very much, you have the skills and your training, so rely on that to empower you to move into different aspects of working for an insurance company, even beyond that as well.
Thank you so much, Ray. And Moronga?
Thanks, Gia. I think it's quite an enjoyable space to work in, and it's constantly evolving in terms of products, regulation, systems, competitors. So that also makes it quite exciting. And it is challenging. I mean, thinking about long-term impacts and capital and valuation and pricing takes quite a lot of, it's quite a challenging work and very rewarding. There's a lot of opportunities, so different roles that one could get into. So I think I would definitely choose the life insurance space if I had to choose again. And generally, the actuarial training, I think, is quite powerful. And I'm finding even in my role, which is a bit more generalist now, just the skills that you learn, the technical skills, and that the ability to think about things from first principles is really powerful. So I would definitely still follow this path.
That really makes me happy. I'm happy for you. I think the last question as well from the audience is it possible to perhaps ask one of the panel members for mentorship, career guidance, and advising if possible? I don't know who would like to take that.
Yeah, I think from my side, the short answer is yes, for sure. But I put in the chat as well, if you can contact us at that specific Old Mutual actuarial address, and then we can work from there. Yeah, for sure.
I think from my side, that's all the questions I had today. Thank you so much to the panelists and to everyone. And I'll now hand back to Karen.
Oh, thank you so much, Kia and everyone. And it was really, really inspiring. For a minute, I was like, maybe I should have done life insurance, given all the, the passion that was just coming through, and listening to you guys from your work and the people just the culture. You can definitely tell that you guys, in as much as it's challenging, your support and, the no regrets, and it's really, really inspiring. And I just want to thank, firstly, our panelists, Prabashni, Morongwa, and Reg. Thank you so much for spending your time just to share a little bit about your lives and being vulnerable. Reg kept saying exemptions, so that something happened there. But it was really, really inspiring, and thank you so much for being vulnerable with us. And special thanks again to Kia for hosting the session. Really enjoyed also hearing from you, from your experience, and how much you want to take a nap sometimes. Maybe we can introduce that in our policies. But yeah, no. Thank you so much for essentially having the session, and a special thanks to everyone who managed to attend the session and the questions that came through. I've put an email address like what Rach was saying, oml@oldmutual.com. Please email us any feedback you have for us, and any other topics you want to see in the future. And as Old Mutual, as the actuarial industry, in our own capacity, can try and assist you. We want to see more people take up the profession, more people qualify as well, and we'll do whatever we can in our best interest. And in the background, I know we've got our IT, and I just want to send out a special thanks to you guys. Look out for the recording. We'll make it available publicly on a YouTube link, but we'll send it out to everyone who registered. So if you can check out in the chat, there is a link to the registration form if you haven't registered already. But other than that, thank you so much, and wish you a great evening. And we'll see you on the next sessions in the future. Thank you so much. Cheers. Bye.